is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future. It's something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
Habibi.
Wagwan, good afternoon, how you doing? Can you hear me?
Yeah. Good afternoon.
Good afternoon, Albert, how you doing?
Well, did not have a good day yesterday. Had a couple of losses, but nothing too bad.
Yeah, same here. From plus 6k went to minus 2. Unfortunately, gold fucked me over. But the only easy day was yesterday. Today we are going to have the second revision of the Q1 GDP data in the United States of America, which is coming up in about 39 minutes. We're also going to have initial and continuing jobless claims with some real consumer spending, manufacturing sales. Oh, so exciting Thursday. So let's better crack in and do some analysis. Now, what do we know about GDP, Albert?
Well, we know that if the news are inflationary, the dollar will pump and then go down.
Mm-hmm.
And well, that's the price of the goods.
The last GDP data, so the first data which came out, first statistics about the GDP in Q1 was what was it? Sorry, let me just quickly check.
1.1.
Yeah, 1.1 versus 2.6. So the estimate for Q1 is going to stay at 2.6, but month on month there is a fluctuation because it's difficult to gauge a whole economy's GDP based on one single number. So that's why GDP comes out every single month and they're revising the previous or the previous quarter. So the previous one was quite disappointing, 1.1 versus 2.6. And the forecast now is of course the same as the previous 1.1. But if you look at the previous numbers, there could be deviation, there could be some slight changes. So unless we have a whole percentage point standard deviation plus or minus, I don't think there's going to have too much of an effect on gold, on USD or any other assets. On the other hand, we also have labor market data. What do we know about the jobless claims? Do we know anything about jobless claims?
Yeah, it's terrible.
Yeah. How you doing, Don?
I'm good. So, as yesterday it didn't go up, today it should.
If it didn't go up yesterday, today it should. Well, so looking at the macroeconomics, the fundamentals, still, what is the number one thing that's dominating the market right now? What is the big news in the market? The story.
U.S. debt.
Yes, the debt ceiling in the US. And now the rating agency Fitch Ratings started to trash talk on, what would happen with the US economy if they fail to pay their obligations to look after the debt that they owe. Oh, freaking hell. I'm so tired.
Coffee
Of course,
or Red
that.
Bull, man.
Oh, I need something. So we still have the debt ceiling issue weighing on markets, and now Fitch Ratings just came out with a pretty nasty forecast at what would happen, what could happen if the US defaults, which is good. This is bullish for.
Mas é engraçado que, tipo assim, as coisas de casa, precisa comprar a comida. Aí, tipo assim, meu Deus, tá gastando dinheiro. Agora, na hora dele comprar as coisas.
How you doing, Sergio? So basically, bad news around the debt ceiling or no news is actually good for gold. So that lifts up gold. As you can see that on the narrative, no solution for around the debt ceiling helps to lift gold up. If there are positive developments around the debt ceiling, that is bearish for gold. I need to wake up. So that's bearish for gold. The problem is that we still don't know what's going to happen with the debt ceiling. It's least likely that they're going to default. It never happened, it won't happen, and not today, not this week. But the problem is that any single minute the government can come out from its cave and announce that they have come to an agreement and the debt ceiling will be raised. But we don't know when is it going to be, when will it be. So until that, the market is going to move in a shitty way. Now, putting all of this uncertainty onto the chart, can we see everything on the chart? We can see some parts, but the consolidation that you can see, which is marked on the chart with a nice bear flag, I would say, it marks a very nice support and resistance level at the current 1957, 1960, and also 1985, which is another important resistance level. So can we expect that the price is going to zigzag, move in between these two support and resistance levels? Absolutely, yes, it is possible. Now the problem is that this consolidation or this sideway movement makes me a little bit nervous, because usually when price consolidates above a support level, around 70% of the time it breaks down the support level. Is it going to happen today? We don't know, because there is 30% chance that it won't happen. There is also high chances, the probabilities that price is going to zigzag and come back to visit 1985 price level, which lines up with weekly pivot, daily R2 support, the resistance level, and also many important support and resistance level. We don't know yet. It's really a guessing game right now. So if anyone tells you that they know where the market is heading, if anyone sells you signals or oh, this is going to happen, that is going to happen based on technicals, they are absolutely lying. No one knows what's going to happen. Uncertainty is again elevated, like in every single month. So chances are 50-50 the price is going to revisit 1985, or it's break down this consolidation. Dios. People questioning or asking, do I have any open positions? I still have the US 30 positions, and that's all I have. I don't have any open positions on gold. I'm still just holding the positions, not entering into any new position. What do you think? Gold, buy or sell? It looks like a buy. It looks like it's going to revisit the top of the bear flag.
Maybe a push down first and then buy.
And what if it goes up and then down? Or maybe sideways and then up and down? No one knows. I would be tempted to put in a buy, but no, it will be just a wild guess. Unisfoto, why don't you talk about losing trades in stream? 2-day streak, stream, stop loss. Yes, I had a losing day yesterday. Do you want to talk about it? Feel free to do so. I posted in my trading group. It is part of the game. If you cannot stomach it, then trading isn't for you, buddy, unfortunately. And gold looking like it's edging higher. What positions do you guys have open?
None.
How you doing, Thomas?
Yeah, hey Tess, how you doing, brother?
I'm alright. I just noticed someone talking about the gold stop loss, but no one want to talk about the US 30 drop you caught yesterday. I missed it, but I was watching, and that was a hell of a trade.
Yeah, you know, there's winners and losers, so we can brag
Exactly.
about the winners, we can talk about the losses, but usually I do both. When I have a winning day, I post the wins. When I have a losing day, have a look on the channel on Discord. I did post my losses yesterday, so if anyone tells that why am I not talking about losses, I do talk about losses, and that's how it should be, because we win together, we lose together. So if anyone says that I'm not talking about losses, then you can do me a favor, because that's not true. That's absolutely not true.
How's the little man?
Yeah, very good, thank you so much. Growing crazy fast. Mike Frazier says it's a buy. Buying gold. Do you have any open positions, Taz?
I have an open gold position from 57.58.
It's a buy, yeah, right?
Even. I took partials a little while ago as well.
It looks very tempting to enter into buy, but with gold you never know.
Yep, sharp move.
Wise Banks is asking, hello, I noticed most of the traders on YouTube are in their early 20s. What do you think about starting FX in my middle 30s? There's nothing wrong with it, brother. I don't think that trading is restricted to age. There are pros and cons whether you start early or late. but it depends on your experience in trading. Now the problem is that if you start trading late, and if you have any understanding about financial markets or trading, you could be biased. But the earlier you start is the better, because you are unbiased. And also, many of the middle-aged or more seasoned traders have very bad habits, and not just in trading but in life. The problem with matured men and women, well, mostly men, that they have big ego, and that is very bad for trading, and they can't accept the losses which comes from trading. And this is why I favor to teach, the younger generation. But also there are some people who started trading, 30s, 40s, even 50s and higher, and they do have good results. So I don't think that trading can be really limited to age, or you cannot say that you must start it in your teenagers or 20s. The most important is try not to bring your bad habits into trading from life. Leave the ego outside and try to humble yourself in front of the market when you start trading at a later age. What do you think about it? Is middle 30s too old to start trading?
I guess I better leave the room then, Thomas.
No, well, there's different. Women's are different, and not about the age, but yeah.
Oh, okay.
I think it doesn't matter as long as you're committed enough and you're willing to learn from your mistakes.
Yeah, but the older you are, the less committed you are to learn, innit?
Not for me, but maybe for some.
No, I think the majority of people are unwilling to learn when they reach 30. The least likely they're going to learn. Less likely.
It depends on the individual, doesn't it, really? Some of us will keep studying till we're... Some of us don't stop.
I think that's, speaking from own experience, and what I see around me is that people have more difficult... Well, they do study, but, majority, they just, to get on with work and say, well, I'm too old enough to study. They get kids, they get tired, they don't have time. There's always excuses. The same as gym.
I started very late. I only found out about trading because I was unable to work due to an accident.
How do you find out about trading?
Well, after I had my accident, I wasn't able to work, so I jumped online to look for other ways to make money. And then first I found drop shipping, which I weren't really interested in. And then I found trading. So I started off with a demo account for about 6-8 months first. Learned. And then I found the alpha community, and everything came together after that.
Good to hear, brother. Yeah, I think pretty much this is the same route. People see, Instagram, Lamborghinis, how to make money fast. They're looking for a second income. Maybe they want to leave the 9 to 5 or night shift or whatever they work and have an easy life. Everyone is trying to get out from the rat race. Trading does offer a very good source of income, but it ain't easy, I have to tell you.
Thomas, do you maybe think that most of the people who trade actually just use technical analysis, and that sometimes it's their downfall?
It's
just you stop learning after you study technicals, and then don't progress the fundamentals.
Yeah, it's. I would say it's about 95% of people, of traders. About 90% of traders just look at, a chart and they, I think price is gonna go up. Big buy and a big dump, and then we have manipulation, because when you look at the chart, it's much easier to understand support and resistance and trend lines, it's something easier to digest for the human brain. And not just, for older people, generally speaking, it's easier to understand when you draw a line and say, yeah, that's a support, so price is going to go up. But when you start talking about fundamentals, like how on earth is the GDP or the continuing jobless claims is going to affect the gold prices, which one is easier? Draw a freaking trend line and say, oh, it's going to go up, or explain that because of the labor market stress, because we have a strong labor market, and explain the follow-up results on or the effect on gold prices. Of course, everyone's going to, or 90% of the traders are going to stick with what they're easier to understand.
Yeah, I agree with you. My recent trade was I shorted Turkish lira bond. I think I sent you a message a few months ago that I'm actually waiting, something like that. Yeah. And all that actually came from fundamentals. And I agree with you. What you have just said, there are very few people, especially who are not professionals, who actually use the fundamentals in their analysis, how unemployment or employment rate is going to affect the stock market. And
they have absolutely no idea.
Yeah, and this is absolutely the most important factor in trading, most definitely.
Well, yeah, I do agree. We share the same view.
We share the same view. Sometimes we share the opposite sentiment directions, but we share general market economic conditions in the same way.
But the difference is that, when you look at the technical traders, and I'm not trying to slander anyone, but when you look at in any trading group, any Telegram, WhatsApp, or whatever trading group is, there are some very loud people, smart money concept and trade like the banks and, all that. And they look at the chart and they do their magic, they do the lines and etc. And they say, it's going to go up. And then someone comes in, it's going to go down because, and they cannot really explain, but they say, well, I'm using this method and this strategy, which is better than yours. So I think it's going to go down. But the difference between them and us is that we can have a matured conversation, a professional conversation, and explain that, looking at the labor market data and the overall strength of the US economy, we can conclude that because we have a strong labor market, is inflationary because of the wage inflation, it should be continue to be further bearish for gold. But then you factor in the debt ceiling, etc., and the conversation goes on, and then we add value to each other because I hear out what you have to say, and vice versa, and then we can conclude, okay, maybe one of us have some better reasoning, and then we have a mature discussion.
Yes, I agree with you. It's not enough. I also heard about the smart money concepts and all that stuff. The viewers must know that central banks don't want to take your $10, $10,000, $100,000. They want to take each other's money, and they actually would like to trade against each other. JP Morgan would like to defeat Goldman Sachs because the profits are in billions. These are billion-dollar companies, not $100,000 companies. And that's not retailers against, I don't know, central banks or big investment banks. They all play the same game. And there are no specific order blocks that manipulate the price. More price manipulation will actually be seen in stock market by specific hedge funds, for example. But why would, if that was the case, why would hedge funds like long-term capital management in 2001 or 2, I don't know which was the year exactly, go bankrupt? It was led by 3 Nobel Prize winners in economics. And people have to learn who is playing the game with them, right? Not just retail traders or some I don't know, Martians that control the price. It's all about macroeconomics and fundamentals.
The market maker is controlling. The market maker wants to take that $200 account of yours. Oh, gold started to edge a little bit lower. Now this is the reason why I don't like to buy at support. So the market maker is definitely trying to manipulate the market to take away many of the $50 accounts or $200 that many of the traders have.
Or B-book
And
brokers.
and it's difficult to understand for people that it actually, economics, as Ivan said, economics is moving the market and and not the evil market maker. There is manipulation, but here's the question. If you believe in order blocks, these markets are uncentralized, the FX market, etc. But even if you trade stocks and indices, yes, order blocks, do they really work? There is block trading, which I did when I traded on cash equities floor. There is block trading, but it's impossible that you identify through a chart that there is an order block. The reason for this is because there are dark pools, algorithms, and many other methodologies. Because if people buy from a dark pool, they don't want to be seen on the market. Anonymous, they want to stay. Therefore, I think it's just a bullshit, the order blocks. But anyway, I'm not trying to change anyone's mind, because it would be difficult to go against like a massive market and try to change anyone's beliefs. Because again, as we discussed at this beginning of the discussion, that it's easier to look at the chart and explain some kind of theory which isn't there, we just made up, than to actually sit down and learn the fucking economics.
I am currently studying German stock market, and why do I find it interesting? I would appreciate your macroeconomic view as well. We have DAX index, for example. It's really running hot. And we have high inflation in Germany and in Eurozone, which is continued by restrictive monetary policy. Thus, it should reduce aggregate demand curve, push it to the left.
Say that again.
And in the German market, right?
Mm-hmm.
I'm studying the fundamentals of it. And what we have is high inflation, around 7%. I think it was the last result in Germany and in Eurozone. Core CPI is still pretty high. Thus, central banks should continue with restrictive monetary policy and push the aggregate demand curve to the left.
Mm-hmm.
But DAX is going higher. It has started falling maybe 2 days ago or yesterday.
Mm-hmm.
And what I'm actually waiting to see is, I would like to see the financial statements of the companies, maybe in the next quarter, if they show results of falling revenue. Because if you have read the news today, another GDP fell in Germany. GDP results fell in Germany, which was actually recessionary. I need to study it more, read about it more. But this looks like a good short opportunity on DAX in the middle term. I'm not sure in the short term.
Quick, two questions. Well, the first one is actually a statement that the stock market is not in my opinion, it's not a representation of the real economy. So if the economy is doing well, many times you see that the stock market is doing extremely good for various reasons. One of them could be this share buyback, because companies know exactly that if the economy is not doing well, they have to keep up the impression that they're doing well. So they're buying back their own stocks instead of paying dividends, which leads to an artificial lift of the share price. And then if people see, oh, share is going up, I should buy, which is only lasts for, a few quarters.
That's what Boeing did actually a few years ago, and now they're in problems. If you look at their income statement, they did share buyback 2017, 2018, I think it was around $10 billion. And now they're at a net loss. If they weren't duopoly in United States, they would probably go bankrupt. It's really interesting stuff.
Yeah. On the other hand, so we talked about your stock market is not a representation of the real economy, so there could be divergence. Stock market is going up, economy is crashing. We talked about the share buyback, which is an ugly strategy, but it does work. And I wanted to say something else, but I can't remember what.
Forward P is below average. That's why I'm still waiting. I'd like to see it above average and then see the bad fundamental results, maybe some continued bad economic data, and then I will enter a short position.
I'm not an expert in financials, in company financials. I would look in the when I trade and that is the other reason why I'm trading indices instead of individual stocks, because I think that cherry picking of stocks is been long dead since 2008, because companies are just huge. So if the biggest company shits itself and starts to sell off, it pulls down everyone. Like yesterday we had a discussion about, Apple is actually bigger than Brazil if you look at the revenue and the GDP. Crazy, isn't it?
Yeah, it's true.
So we have 4 minutes until GDP and labor market data, ladies and gentlemen, and also we have pending home sales. It's very, very. No, actually that's later. So consumer spending, PC prices for Q1, initial jobless claims, counting jobless claims, and GDP. Well, so many numbers. Which one should we focus on, Ivan?
Sorry, what was the question?
Which data should we focus on? Because we have so many data. We have GDP, we have labor market data. So if we start with GDP, the forecast is expected to be same as the previous one, 1.1, which is a contracting economy. But then we have the labor market data, which is expecting to go higher. So the jobless claims, the average is going up, initial going up, continuing going up. Is it bearish or bullish for gold? If you have a lower growth and increasing unemployment.
Yeah, that would be actually what the Federal Reserve wants.
Yeah, if the Fed wants that would be bullish or bearish for gold?
Bullish.
Yeah,
it would be bullish,
yeah.
because that does not mean that Fed will have to raise interest rates even further.
Exactly, it will
But
be
they will
bullish.
stay hawkish with talking, probably. But yeah, it will not be bearish.
Yeah. We have 2 minutes 40 seconds to get into a position or make an analysis. So basically, if you look at the data, the forecast is actually bullish for gold. Slower growth, increasing unemployment, contracting economy, cooling economy. So that should be bullish for gold. If you look at the news side, the fundamentals, that is bullish for gold, because there is no resolution around the debt ceiling talks. So that's another reason why gold should go up. And then moving down to the technicals, because I think pretty much finished with all the fundamentals. If you look at the technicals, we have this beautiful, nice bear flag pattern. We just hit the support at the S1 pivot, 1957, which lines up with the daily S1, 1955. So chances are higher that price is going to continue a little bit higher, maybe to clear liquidity around the weekly pivot. So from just under the pivot to the weekly pivot, and then maybe continuing the zigzag, who knows. But the problem is, if you want to talk technicals, that this consolidation is making me a little bit nervous, because usually when it consolidates above a support line, it usually breaks to the downside. But all in all, concluding the macroeconomics, the fundamentals, the economics, the forecast, gold should continue higher around the 1977 area, so it's about 200 pips. And we have 1 minute, ladies and gentlemen. If everything lines up with the forecast, if everything goes according to the forecast, then it should be a nice juicy buy. And US 30 is a sell, a big, big sell. So, Ivan, should we try a buy when we have 40 seconds?
I will not. Not.
I try.
I actually shorted yesterday on the top of your range and closed 80%. So I'm still waiting.
I did enter into a small buy, just speculating. It's only a small buy. Going with the forecast of the data, and we have 15 seconds. So Anthony,
hello Thomas, I'm on sale.
Hi number one, how you doing? So I entered into a buy on gold, and we have 1 second left, and a sell on US 30. And price just went back to retest the bottom
I
of the
sell
channel.
already.
Let's have a look on the data. So core PC prices, that is inflationary, GDP. Initial jobless claims, wow, that is deflationary. Continuing jobless claims, not much change. Initial is a surprising data. What else do we see? Consumer spending, again, that it's a bit inflation. It's a very mixed data again, but I'm holding my buy on gold, but only scalping to around 1970. On US 30, let's have a look. How did it react? US 30 is a bit of a froze down and waiting for the market open. And
I have a buy
look.
on US 30 from weekly pivot point.
Oh, there's the weekly pivot on. I didn't notice that. Let me just put the
You
weekly
have the
on.
wick down. I bought it maybe, I don't know, 3 hours ago.
But the weekly pivot is far away.
S2 on your right side.
Ah, yeah. I can
The
see
weekly
that.
is below. Yeah, that's where mine too was. I thought it just went too much of bearish before further retracement.
Ooh, position
again
is
bearish.
invalidated on gold. Fuck me.
I have my sell position. Make the money, take the money.
Good for you, brother. Let's see. Corporate profits down to -6. That should be bearish for US stocks. GDP Q1. Slight revision to the upside. 1.3. It should be inflationary. But then you look at the initial jobless claims. No, that's actually inflationary, sorry, because there's less unemployed people. So less people claiming unemployment benefit, which is inflationary. So according to the data, which is, I would tend to be more on the inflationary side. GDP higher, inflationary, jobless claims. Okay, let's see how the market is reacting. Is it going to break down the bear flag? Who's selling?
Selling, Tama, selling. Wagwan.
Wagwan. I have no position on gold. I'm holding the sell on US 30. The jobless claims is quite inflationary along with the GDP. Let's have a quick look on Bloomberg. What do they have to say? Hold fire. Not much. Let's have a look on investing.com. Go to news. Yep. Is he going to revisit 1930? Yeah, most likely, because of the inflationary data. I'm not entering in gold. I think I'm late with that one. But in US 30, I added a third position for sell. Let's have a look at MetaTrader. On the daily time frame, gold is looking very good for a big drop. Let's follow the money because of the inflationary data and do a cheeky sell. And that based on the inflationary data which just came out. Targeting around, well, 1930.
Niagara, tama sa Niagara.
Niagara.
Thomas, can I ask, what are we trying to compare? For the actual, is it the forecast or the previous?
It depends. You have to look at both of the data, actual and the forecast as well. So
yeah, but I mean in the initial jobless claim, the previous is 225K and the actual is 229, which is higher. So it means it is deflationary. But if I'm going to compare the actual to the forecast, it is inflationary.
Yeah. Then you have to change the narrative. Initial jobless claims didn't go as high as it was expected, or increased slower than it was forecasted. Is the wording that's very different. And in this scenario, the actual was 229 versus 250, so it didn't reach the forecast. The previous one was 225, so it grew slower, meaning that the labor market is still extremely strong because it can suck up the excess unemployed people on the market just like this. So in my opinion, the narrative of the translation should be it didn't grow as fast as it was as it was expected. So it's still strong labor market, which is inflationary.
Oh, I see. Okay. Thank you.
You're very welcome. Quickly, let's have a look if we have any other data coming up. But I think pending home sales, which I'm not very interested. Yeah, I think pretty much that was the main data for today. Ivan, do you have anything on your watch list for today? Anything else?
No, only news we had right now.
Yeah. Which was inflationary. Looking at the calendar tomorrow, we are going to have PCE prices.
The most important.
Yes. Do you know? Well, you know why. Do you want to share why is it an important inflation data, even more important than the CPI?
Because this is what the central banks primarily look at when they decide whether they are going to rate hikes or not.
Exactly, because PCE and CPI are fairly similar. But the difference is that PC price takes into account the effect of substitution. So it's less volatile, it's more difficult to judge, and it's more professional way looking at the inflation data. But it is preferred by the Fed because it tells the whole story. Yet CPI is favored by traders because it's more volatile. It's an important data. We are going to live trade it. So I'm going to lock in some positions because gold is running in 70 pips. It was a late entry. It could have been 140 pips, but that was a late entry. So I'm just going to take some money off the table.
Tamas. Niagara Falls, Tamas, Niagara, let's go.
Okay, closing down US 30 as well, just in case if it pulls back. Oh, 81 pips on gold. That's very nice. It took me a while to figure out, to incorporate all the data, counting jobless claims, GDP, whether it's inflationary or deflationary. But in the end, now it's running at 80 pips profit. Here we go, 1930.
Mio lusut putih dah aku nggak mau nih.
Habibi.
100 pips. Very nice. Unfortunately, US 30 is edging higher, so I have to say goodbye to that position, which is a bit of an odd considering that the data was inflationary.
Wagwan.
Wagwan. Good profit?
Yes, thank you very much, Tamas, for everything. You are the best, man. You are the best.
I'm not the
Number
best.
one.
You're very kind. You're very kind. Okay, closing down. One more US 30.
I'm very thankful for the Alpha team, for the knowledge you shared every day, every time. Thank you, Tamas.
Thank you so much for the kindness. I'm trying to. It's tough. Sometimes there are losses, but there's a reason why we're here for over 2 years. $100 pips, very nice.
It's okay for me for today, taking the profit. Thank you, everything, and goodbye. Ciao.
No, you leaving?
I'm leaving. I already have the money, man.
Good
What can I
boy.
ask for? What can I ask for?
Very
Going
good.
to open some red wine sticks.
Very nice.
Enjoy the night.
Have a good day, brother. See you later, alligator.
Thank you very much. Ciao.
Ciao, ciao. Number one.
Oh my word. Hello. Hello, everyone.
How you doing, Bram? Did you buy?
Oh, I had to go for a quick site visit with a client and I missed everything. No, I didn't buy. I was not at my screen, so I didn't do nothing.
Good, good, good.
I
No
missed the
position,
sell.
no loss.
No,
No,
yeah.
you didn't miss anything. But did you miss the sell? But did you learn anything from missing the sell? Did you learn why did the price drop 200 pips?
No, I missed the action. So I
Can
don't
you
know
see
what
the
happened.
screen?
I can see it now, yeah.
All right. Let me explain. The data
yes,
today
yeah.
which came out, and this is important, guys. You didn't lose anything. You are going to gain knowledge now and experience. The data which came out today was quite inflationary. And the reason for that is because if you look at the jobs data, which is the continuing jobless claims, it's decreasing. Initial jobless claims decreasing compared to the forecast. If there is less unemployed people, less people claiming unemployment benefit, that's inflationary because they're going to the job market, sucked up by the labor market. They get paid, they're going to spend that money, that's inflationary. It generates inflation, that's bearish for gold.
Okay.
That's bearish for gold. If you look at the GDP, again, it was revised from 1.1 to 1.3. It's going up. Is still the Q1? The second revision is higher. That's again inflationary. So both of these factors are inflationary, which leads to us with the small narrative I wrote in the chart. If you have, hawkish inflationary data, low unemployment, less growth, overheating economy, that is bearish for gold. Do you follow me, Bram?
Understand. Yeah, I do. Yeah, I do.
All right.
Understand
Do you have any question?
Yeah, probably just wait for pullback, maybe.
Yeah, but if next time when there is a data print, just do the same analysis. Try to determine, is it inflationary or deflationary? And simple as that. Now, those who missed the trade, maybe you didn't miss it, because now we have an impulse move showed us the direction. The impulse move was created by the data because that was inflationary. And we have the direction set, which is south, right? And all you have to do is just wait for the retracement. We had the impulse move showing us the direction because of the bearish factors, the inflationary factors. And all you have to do is go down to a lower time frame and you see this big fucking impulse candle. All you have to do is go down to, the 15-minute. That is a good representation. It's going to be confusing because, it's another time frame, but you have this consolidation, which is broken by an impulse move. And all you have to do is wait for a retracement and then continue down to 1930. Fibonacci retracement I use it religiously. It's one of my favorite tools. And if you look at the retracement numbers, I would say 61.80, between 61.80 and 78%. This is going to be the sell zone right here. I'm going to mark it with green. And what we have to do is just wait for the pullback, for the retracement. And go back to higher time frame, because I like higher time frame to see. Enjoy your meal, Bram. All you have to do is just wait price to pull back a little bit. Now this is going to scatter shit out of most of the people. They're going to jump on because price is pulling back. It isn't a reversal, it is a retracement, a pullback, a retest. Simple as that.
Okay, yeah. I was just a bit busy. I couldn't see the news when it came out. But well.
Yeah, but when there is no news, Bram, just don't trade, because when you look at the chart,
the more I think about it these days, it's for me, because I'm so busy with my work, I just need to look at these events and then wait for them, and then just leave the other days. Otherwise, I just lose money.
Exactly. If there's no data, most likely, we're going to lose money. But when there is data, yes, it's difficult to, fucking hell, look at all of these numbers. It's difficult. Even myself get confused sometimes, like, oh shit, is it inflationary, deflationary? But that's why I make my life easy and just write down everything on the chart, and for your convenience. And, it's clear. If the data is inflationary, just sell the shit out of gold. If the otherwise, deflationary, then just buy. Simple as that. All right, still 100 pips. I'm going to take some more money off the table. I don't want to wait for the retracement. All right. Even more. £800. Not bad.
I think Thomas is stopped there because I'm seeing a trend line in the weekly time frame. About the gold.
And what are you buying or?
I'm selling, but I take profit already.
Good. Very good. Hutaifaf Ali is asking, what about US oil? Ain't trading US oil. That's one of the most manipulated assets in the whole world. So no, thank you. If you wanna trade something that's manipulated, oil is your favorite. $19.30. Yeah, that would be my take profit level. So if anyone asking where is the take profit, $19.30. All right. Did you miss the morning briefing today, Bram? I saw your message.
I thought you said you're not gonna have one.
No. Exactly, because price is moving sideways. If you look at this morning, it was just a sideways movement, so there's no point.
Yeah.
We have the morning briefing.
Are we having one tomorrow?
Do you want
Friday?
one?
If there's nothing gonna happen, then
yeah, we can have in the morning, and I have a live session in the afternoon for the PC prices. Those of you who don't know, I do daily morning briefings where I talk about macroeconomics, fundamentals, and then look at the charts for technicals, because technicals are important, but I'm a macro trader. If you'd like to join the alpha community, all you have to go is, if you want to get morning briefings, daily morning briefings, daily live trading, the whole story, go to alphafx.eu, link in the chat right now, use the 50% discount, and join the alpha community, and you can enjoy the morning briefing with Bram.
yes, please. I'll have to shoot. I've got another meeting now, 2 o'clock. So
See
I'll
you
wait for the
later, big man.
replacement. See you later.
All right.
See you in the morning.
Bye.
Thanks, guys. Bye.
All right.
I just logged on. Looks like I missed something.
Hey, mate. Yes. Let me just... you just logged into the Zoom, right?
Yeah, just turned on the computer.
The computer. So we had the GDP data print along with the jobless claims. Jobless claims numbers. And all it came out inflationary. It did took me, a few seconds to go through all the numbers and take the position. I had one losing long position, but then luckily took the right side of the market and started selling, which is now running in 90 pips. So GDP and jobless claims claim out inflationary. If the data is inflationary, as I wrote in my chart, then sell gold. High treasury yields, inflationary data, low unemployment, overheating economy, slow growth, inflationary data. It's an easy sell for gold. So that's what happened today. And I didn't trade this morning. This was the first trade, or the second trade, sorry. And it was worth it. Patiently waited, concluded that the data was inflationary, and just sold. Boom.
Yeah, well done.
Those who missed it, now that we have the direction in form of this big freaking info scandal, and you can bring in the technicals now, you can see that structure has been broken, bear flag has been broken, support has been broken, your mom's heart has been broken. All you have to do is just wait for the retest. Every impulse move is followed by a retest, but to see the retest you have to go down to a lower time frame, 15 or 5 minute time frame. You can see the price already started edging a little higher and higher, and surprise surprise, it's on the weekly support level, this yellow line, and the best or the highest probability retracement levels can be found on the retracement, a Fibonacci retracement, which will be most likely between 1953 and 1958. So it's 50 pip range. If it comes back and it stays below 1960, you can jump on to the selling position. Now be aware that it's getting riskier and riskier. Normal market conditions, this is how a break and retest works, but the problem is that we have another story in the market, which is the debt ceiling. There's no resolution, no information, they're still, negotiating, and when they come out and say, okay, we done everything, we come to a conclusion, then it's going to mess up the markets. Sorry guys.
When are they coming out?
Well, no one knows. Just going to announce it one day. But they had the deadline of 1st of June.
We're in a black hole.
You like the black holes, aren't you? Yeah. Anyway, guys, good day. Not many losses and 100 pip sell. I'm gonna call it today because it's Friday. Well, almost Friday. A few hours. I'm gonna pop a beer and see you all tomorrow for the morning briefing. All right?
Thank you.
Thanks, Thomas. Like your
Namaste.
humor, eh?
See you later.
Thanks.
Right, thanks, bro.
Alright, ladies and gentlemen, thank you so much for watching. Don't go just yet. If you would like to join the Alpha community, I'm throwing in a 50% discount. It isn't a signal service. It is, I teach traders how to trade. I used to be a flow trader at a hedge fund and at a bank and a risk manager. You get 50% discount. Link in the YouTube chat going in right now. I do morning briefings, so it's not like you buy a shitty course and you're left alone. It is a everyday, twice a day kind of not mentoring, because I don't like to mentor anyone, but I give you the opportunity to join the morning briefings, because I do morning briefings, record it in Zoom, I do it live and then record it, upload it to the website. So what I do is I explain the macroeconomics, the fundamentals, and everything that drives financial markets, because surprise, surprise, you're trading in a fucking financial market, so you have to be up to date with the financial news and the macroeconomics. These little numbers that we just traded and made 100 pips, these are the macroeconomic numbers. So I do morning briefings every day and I explain what these are and how should you trade. How is it going to affect gold, stocks, US dollar, all that. If you want to learn, if you want to try something else instead of buying the shitty signals, go to alphafx.eu and join the community. Thank you so much, guys. This is the Alpha FX.